Hello and welcome to the Daily Trade. It's Wednesday, May 25th, 2016. Steven here, so glad that you're here. I have an exciting candlestick pattern to discuss today, so let's get started. Alright everyone, I'm super excited to start talking with you about the candlestick, different candlestick patterns. So really though, I'd like to start off with what is a candlestick. Candlesticks are a great technical indicator that I like to use when making my trades. They really show well the psychology behind moves in the market. And so I'd like to first introduce you to kind of the makeup or format, I suppose, of the candlestick. What does it look like and what does it mean? So we see two different candlesticks here. The most obvious thing that you're going to see is that, well, one is green and one is red. And these are quick ways, once you know the difference, of spotting major psychological moves that might be happening in the market. And so let's first take a look at the green candle. Now this green area is known as the body of the candle, or the real body. And when you see a green body or a green candle, you know that you closed higher than you opened for that, whatever the time frame you might be looking at, whether that's a 1 day candle, a candle that's like 1 week or even a month. So we know it closes higher than it opens, and the open is represented right here. And the close is this point here. And now what are these things right here? Well, these are the wicks of the candle, and you might be able to guess what they are, but here's a quick explanation. So this is the highest point for whatever that time frame was. This is the highest point, that the highest price that the stock is trading at or trades at. So we use that same logic down here. It's the lowest price, trading price. So now the red body. You might be able to guess it, but the red body, it's the opposite of the green body in the sense that you open here, but you close lower, and that's why it's red. So you open here and you close here, just like in the last candle. The wick is the lowest price of trading. This wick is the highest price of trading. Alright, so I think we should have a good idea now of what a candle looks like and how it kind of works. So let's take a look today at one of my favorite candles, and that is the shooting star. So the shooting star, what is it? The shooting star is a bearish reversal indicator, and we spot this shooting star in an uptrend. So we'll see this green arrow shows that we're in an uptrend, and we continue this uptrend, and then we gap open on this day, meaning, so we know that this is the close, right? Because we opened up here since it's green, and we close higher than we open when we have a green candle. So we closed here and we gap up on, let's say these candle are representing like 1 day, one trading day. So we gap up, meaning that we open up higher at the market's open. We open up higher than the previous day's close. So what we're going to see happen is the bulls are going to continue to push the price even higher. It's going to go way up here. But then the bears are going to come in strong, and they're going to push that price back down, finishing with a red real body, meaning that we actually, by the day's end, we close lower than we opened up. So it's a red real body. And so it's some real interesting psychology here, because the bulls continue it, but then the bears resist, and they overwhelmingly push the price back lower. Now, we in trading, you want confirmation before you put money out in the market. So what is some good confirmation? Well, confirmation I would like to see after seeing this shooting star is I'd like to see an entire candle's body in the next trading day. I'd like to see that all lower than the previous day's close, and we see that the close, the whole real body here is lower than the close of this shooting star. We also want to see, what we want is a gapping down at the market's open, meaning that we open up, so here, lower than the previous day's close, right here. And that's what we get. Depending on how conservative you are, you might also want to see the wick completely underneath the previous day's close, but really just practice. And a great way to do that practice is in the MarketWatch.com game. It's a free paper trading game, which means you can practice different trading techniques and strategies, and get a little bit more familiar with the approach that you want to take in the market with no risk, just in this paper trading game. There's no real money involved, so you can get great practice and great experience, and it's a lot of fun. How do I join the game? Go to MarketWatch.com, sign up in the top right, fill out the information, click Games, then click Find Games. Search the public game called The Daily Trade. Be sure to join the game. It's going to be a lot of fun.
That's all for today's show. I hope you enjoyed it, and be sure to tune in tomorrow for another exciting one. Comments, questions, feedback, love to hear from you, so drop me an email at thedailytrade16@gmail.com or contact me on Twitter at thedailytrade16. Have an incredible Wednesday, everyone, and happy trading!